Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, August 28th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading, we had a very large black body candle with the sellers making a very substantial amount of net bearish progress, and I suggested that the sellers seem to have done too much work in a short space of time, and it's little wonder that today we've seen some indecisive come into the market and a white body candle, and the white body now denotes a shift in momentum in net terms back to the buyers. A white body candle suggests that the buyers have made an amount of net bullish progress on the day between the open and the close, as opposed to the previous day's trading where the sellers made a very large amount of net bearish progress. This does raise some doubt about continuation of the trend to the downside, and we also have a spinning top type candle now at the end of this significant first time frame downtrend, and it does suggest that there is potential for the market to change trends. However, if we look at where the market closed, it's closed roughly around the midpoint level, suggesting that the buyers have failed to take control of this market. We see this shadow on the top of this candle highlighting price rejection and the buyers losing commitment. And if you recall, yesterday I suggested that the bottom of this large zone of previous support and resistance may now hold as resistance, and that's exactly what's happened. Price action has been rejected from there, so any potential change of trend will need to see the buyers very strong in this market, and there's a lot of doubt as to whether that can happen. By the same token, at the downside we saw price rejection from below the bottom of the cloud, so we now have a market that's bound by very strong resistance overhead and very solid support down below. So a lot of indecision in this market, and certainly not a market that we want to trade until we have resolution of this trend in either direction. Now, we also saw the market take out the window that was opened again for the current day. It was closed for the previous day's trading, and then the market traded back up through there, so that window there becomes insignificant to this market. And to the upside, however, we have that window that had opened up at that very large black body candle around that 1654 level of previous resistance, and also around the top of the cloud. So if this market does appreciate well into this highlighted yellow zone, we should see very, very solid resistance up above there at around the 1654 level. Now, there is potential for this market to continue trading down because we do have indecisiveness in the market, so we should be looking for a potential lower high and lower low, and if we see a breakout down below the cloud, it will give us a potentially strong sell signal, but the market may be breaking out of a flat area of the cloud and we can have false moves. So what we want to see is follow through on the candle after that, if that does occur, not preempting the market, but if that does occur. If we see follow through, this market could quickly trade down to the round number 1600 level of support, but we still should be on the lookout for a potential higher high and higher low. So this market could go either way because of this indecision that has now entered the market. Now, just moving to the Fibonacci Extension, and we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here we've seen price rejection from below the 61.8% level on a spinning top type candle. It does suggest that there is a good possibility of a change of trend, so let's be on the lookout for a potential higher high and higher low in this market. And in terms of the Fibonacci retracement of the prior uptrend, and we're in an expansive mode of that, trading in a bearish manner through the 100% level, the market hasn't reached the 161.8% target. It is well below where the cloud is, trading at 1620, and the market will need to trade down through the cloud. But if we do see the market trade through there, that does give us a potential target to watch price action at. So let's be aware of the market trading down around that level if we do see a breakout to the downside. Now, in terms of Ichimoku, this market remains neutral by trading within the cloud, so we're looking for the market to trade down below for the market to have a bearish bias in the long-term time frame, or for the market to break out to the upside to have a bullish bias. But this market had been trading up above the cloud for quite some time, giving us a bullish bias, retracing back towards the equilibrium. So we have a market that's basically in equilibrium in that long-term time frame, and resolution would be those breakouts in either direction. So if we see a solid bearish breakout and then follow through to the downside, it may suggest this market is destined for lower levels. In terms of the medium-term trend, the market's trading below the Kijun-sen, the pink line here, and that is beginning to point down again, and with a much steeper level angle for the previous day's trading. It has flattened out a little bit, but not flat, so still reflecting downside momentum, so bearish in that medium-term time frame. And the Tenkan-sen is still pointing down quite sharply, and price action is below it, so a downtrend in the fast-term time frame with some very strong downside momentum. Very often when we have solid downside momentum in the market, the Tenkan-sen tends to be that first area of resistance, and the market then bounces back to the downside from there. So if this market rallies up to around that 1648, 1650 level, we could see the sellers coming back into this market. So let's be prepared for the market to come off from that area. Looking at the Chikou span, that's well below the corresponding price action, and that's basically a measure of momentum. So the momentum is now well to the downside in this market, suggesting that there is a possibility of a breakout down below the cloud. So let's be aware of that bias in that overall big picture term, that there could be a breakout to the downside, and be ready for that. But as I've already mentioned, because we're trading around a flat part of a cloud, if we do see a breakout to the downside, we have to be very careful of it. And what we want to see is follow through, confirmation from another candle, and then if we see that, we could see the market quickly testing to 1600.